if you actually think about health tech, insure tech, fintech, all these are just applications of technology in different industries. But what you're seeing in technology, in the 1990s, the top three companies in Detroit used to produce about $250 billion in revenue. In 2014, the top three companies in Silicon Valley produced $250 billion in revenue, but with only 1/10 the number of employees. And what you're seeing now with artificial intelligence is another 10x change like that. And what's really important in both fintech and in insurance is that for the first time ever with artificial intelligence, you're able to scale quality. So you're actually having algorithms that are often outperforming human beings and being able to do it in a very repetitive manner. So when you want predictable outcomes, we're seeing, like for instance, going from A to B, driving, or whether you want repeatable surgery and outcomes, whether you want, from a risk perspective, to really understand the dynamics of your risk portfolio. These things with artificial intelligence are far exceeding the outcomes that have been provided through traditional managers in insurance. So now, if you've got artificial intelligence up at this top end, changing the quality dynamics of risk, and then you've got technology such as blockchain, which are dramatically lowering the cost of transaction. For the first time ever, you can have the cost leadership of an industry with the highest quality. That's a dynamic that used to be very different. You would have to change and trade one for the other. I could either be a cost leader and I'd usually trade off quality, or I become the Mercedes end of the market and you pay a ridiculous amount for that quality. That dynamic really fundamentally changes with artificial intelligence and blockchain. We're a technology company focused on insurance and healthcare. So insurance from a life insurance perspective and then from a health insurance standpoint. And what we want to do is actually change from protection, which is basically paying when you get ill, to understanding prevention and looking at some of these emerging technologies such as genomics, Generation X, Y, and Z are becoming very used to these types of technologies and applying them to the insurance industry so we can really get that best quality at the lowest cost. So our objective very simply is to have the lowest transaction cost in the industry, but with the highest quality around our risk modeling and our customer engagement. And I think that that's a very interesting dynamic. So the way that GenLife is going to operate is firstly as an R&D center for major insurers. So we're partnering with a network of non-competitive insurers around the world to start really running artificial intelligence models over the top of all of their data sets to really train those models off not only the best benchmark practice around the world, but then using intelligence itself to start getting even better results out of those risk management perspectives. We've applied these sorts of techniques in the banking industry through companies like Datos, which is an artificial intelligence company based in Singapore, of which I'm an investor. And we're seeing uplift on mature credit portfolios of about 25% and of less controlled portfolios of about 80% improvement. And what's really amazing about that is that these models are doing it in something like 2 days, which would usually require teams of risk people and consultants over a period of 9 months to come up with a thesis around a new credit model. So in 2 days, these models are starting to outperform humans by a wide margin. Our anticipation is that artificial intelligence will have the same effect in insurance. And we want to explore that very fully to provide that with our partner network, that technology transfer and that capability transfer to truly bring them and make sure that they're world's best class. We're a technology company, so we will look at creating all of the operational stack for an insurer, from the way that it manages call centers through artificial intelligence and natural language processing, the way that it does claims and underwriting, so automating things through smart contracts and using artificial intelligence to manage the risk, the pricing, and all the elements that go around it. So we're truly looking at how you automate the very core of insurance. I think we've seen through history many instances of when you've seen fundamental shifts in technology and incumbents have been challenged in moving towards those new business models. I've worked for some of those companies in the past, such as Compaq Computer, who could never quite make that transition to becoming a direct PC company. And so often they're encumbered by legacy systems, legacy processes, the inertia of their existing business. Channel conflict was one of the things that killed, of course, Compaq. And they're the challenges that many insurers may face during that transition. How do you balance an agency force with a direct approach? These are all actually business model issues which are able to be solved, but they require the right focus to enable people to work and solve them. When you've got a business like some insurers in market that are growing phenomenally, you would question whether it's wise to dramatically shift a business model that's working exceptionally well now. So the question for me is, how do you use technology as a force multiplier within that business, and how do you create other opportunities off to the side where your internal systems are now bringing costs down to avoid that cannibalization on the other side. Very few people think about that cost dynamic and about how to change their existing operation to meet with that requirement. We've seen it very clearly in banking models, such as DBS and the amazing work they've done with their digital bank in India. It's a very different operating model and very different cost structure. And what they're doing now is taking some of that core technology out of the digital bank and putting it back into their core operation.